But its earnings, so let's focus on another management. We have the numbers of Blue Star that came out, and currently we're joined by Veer Advani, the managing director of the company. Hi Veer, thanks so much for joining in today. There was a growth on the top line, so let's talk about the positives over there. What exactly caused this growth? I think we had a 9.7% growth. What were the volumes, what were the realizations, and could you compare it on a year-on-year basis?
Sure, thank you, Mayur. I just want to explain these rather complex numbers. We've had two sets of amalgamations and consolidations in FY15 and 16. So I'd like to highlight to investors that the standalone figures, both for the quarter and the year end, are not comparable. It is better to look at the consolidated numbers for the full year. For the full year, we had a consolidated revenue growth of about 19%. And we had operating profit before interest, tax, depreciation and exceptional items growth of 29%. This has been driven by strengthening of both our electromechanical projects business as well as our continuing growing cooling products business, especially the room AC business. For the quarter, if you look at the standalone figures, they do show a small growth in revenue of about 7 to 8%, but a profit degrowth of 30%. I would like to explain that specifically. One is it's not comparable because our subsidiary company, Blue Star Engineering and Electronics, is not included in the standalone Q4 numbers. It only shows up in the consolidated numbers. The other reason is that we had a sale of our IT business in Q4, which gave us exceptional income. We used that opportunity to address our past legacy projects issues in our projects business that we've been talking about for the last 2 years, and so we made excessive provisioning, probably pragmatic provisioning against the projects business in Q4. So while of course the Q4 numbers do look down, I would like to highlight that we've had a strong operating performance for the full year on a consolidated basis.
All right, let's try to make some sense of these numbers. The EMP business, if I get that right, there has been at least some margin pressure there. Could you tell us going ahead what exactly is going to be going on that side of the business? Sure. Yes, there is some growth that we're seeing on the top line, both for your EMP as well as your cooling products business. But guide us on the margins fronts, because at least that appears that the EMP business is facing some pressures.
So let me explain that. On a full year basis, you'll see operating margins in the EMP business improving from 3.2% to 4.2%. This is after the provisioning that we've taken in Q4. Okay. We're very confident of a strong look ahead because order inflow increased 19% in the year. Our carry forward order book is higher by about 17%. With our legacy projects now provided for, we're looking forward to a strong few years ahead linked to the government spending as well as a recovery in the real estate market, which we expect in about 6 to 9 months. With the parts cleaned up and a strong order book, the only challenge we have is that we are maintaining our billing rate linked to cash flow. Cash continues to be a challenge in the market because of the NPAs that the banks are having to take, and therefore corporate lending not restarting. As soon as corporate lending restarts, we expect that this business will pick up strongly. That's as far as the segment 1 is concerned. On the cooling product side, you'll see margins for the full year moving from 10.9% down to 10.5%. That 0.4% correction was what we had expected because we had a large factory of ours that came out of SENVAC benefit last year. So it was a budgeted degrowth in the operating margin, but you will see a strong growth in revenue. Specifically, our room air conditioner business grew 22% in the last year. We had a market share of 10.5%, and we're looking forward to a 30% growth in that business in FY17.
All right, Veer, let's get some forward-looking statements then. What is your market share? What do you expect it to go to? That's question number 1. Could you give us some guidance in terms of revenues for the coming fiscal? And finally, I think we spoke earlier this year as well, and you had indicated maybe you're looking at maybe some exposure to exports as well. What is it currently? What are you looking to move to?
Great. So on the room air conditioner business, we closed the year at 10.5% market share. Our aim this year is to get to 12%. The market is expected to grow by about 20 to 22%. We expect to exceed 30% growth in that business. Very, very, very confident of doing that. That's basically driven by the energy efficient product range that we have and a move in the market towards inverter air conditioners. On your second question of exports, we had a great year last year. Business grew about 40% from a small base, but nevertheless a strong growth. We expect a similar growth in the current year. We are exporting across the Middle East, in the SAARC region, and we are just entering Africa. Africa will take about 18 months to generate revenue, but in the meanwhile, the Middle East and SAARC region continues to be a strong market for us in spite of the oil challenges that they're facing. So going forward, we stand by our commitment of growing exports at a compounded rate of 30% over the next 5 years, and for it to become 20% of our business overall.
All right, we're good to see you in. It's been quite hot, but I'm sure that's good for business. Let's hope that FY17 is even better than FY16. So that's the management there of Blue Star, sounding reasonably confident going ahead. They're looking to up their market share to around 12%. They're saying exports are growing, and they're looking at it going to around 20% of their total business. And in addition to that, they're saying that the market should grow by around 20-22% or thereabouts. They'll do close to around 30% because they have very efficient energy saving units as well that are up on sales. Stock is down, but management commentary sounds quite positive. We slip into a short break. You come back, we get chat.